Good morning, everybody. Mike Vacchi, Princetontrader.com here with your Wednesday market webcast. All right, so we talked yesterday about weekly pivot being support back here, turning into resistance yesterday. That stayed true. Both the 9-day and the weekly pivot continue to act as resistance. So you've got monthly pivot here still 47.51. Now you've got the daily mid-band coming up to meet it at 47.51. So, if price gets down there, how price reacts to 47.50 is going to be important. If it happens today, on the day it happens, but that has a pretty serious impact on the rest of the month and as we start the year and the tone of this market as we start the year. So what I mean by that is this. If you make an all-time high on the futures and you don't have a corresponding high in the cash, if you come back in and you hold this area as support and then you take out this high, then the likelihood that that cash follows, makes an all-time high, and we lift up and go and deal with things like upper Bollinger Band and 4,900 and things like that, that is very, very achievable because you've worked off the fuel to get that done. This is this little 3-4 session pullback. That's all. Now, the flip side of the coin is this. If the bears can get down here and not run out of gas and turn this area into resistance as they've turned the weekly pivot in the 9-day into resistance, then things start to open up a bit. Then you start to look at things like the lower Bollinger Band, the 50-day down here, testing this consolidation area that was between 46.55 and 45.99. So what happens here is going to be important, and it's going to set up the next move. So you got to keep that in mind. Hourly chart, it was really two-sided yesterday. You had a false breakout. They dumped it down here. You had a false breakout here, middle of the day, false breakdown. They rallied it up into the close. Now you're down testing these lows. So that low from the 3 o'clock hour yesterday was 65.5. Did you matching? Since I turned this on? Yeah. So you got matching lows at 47.65.5. That doesn't mean that's the end all be all of whatever. But, what you are doing here is you're coming back to test this area. From back on the 21st, that was 55.5. So you're right, you're right down in this area. And as I mentioned, you're below the 9, you're below the weekly pivot. I think that sets up monthly. I don't expect this to hold. I expect a look, if not today, this week. And how it reacts is going to be important. But what the bears are doing a good job in, call it the shorter to intermediate term, is they are rejecting these pops. And creating, moves down to lows. Yesterday they made a lot of lower lows. Look, they tried to buy them. They come in, stick save, send them up, lower lows, stick save. That's just the functionality of markets. But what you're not seeing is just that ripper to the upside. That's not coming back. That V type of a move, at least not yet. And the bears at all costs have to avoid that kind of move if you get down here to 47.51. Other numbers today, you've got hourly mid-band 47.81. VWAP, volume weighted average price, is 77. Proprietary moving average, 72 and change. And that's, that's where we are. Keep an eye on 47.81. See if that holds as resistance. 47.50 is the deal. All right. Everybody have a fantastic day. Be safe, be healthy, take care. Trade them well. New year, you can be a new trader. You can be a better trader. You can be a more risk-focused trader. You can be a more consistent trader if you set up some rules and get some education and do some things that you need to do. And I think that, Princetontrader can help you with that. So if you're interested, if you're on the fence about coming in and checking us out for a couple of weeks, come on in. We would love to meet you and see if we can, help make you a better trader. All right. Take care. Trade them well. I'll talk to you tomorrow. Follow us over on Twitter, Instagram, and Snapchat at Princetontrader. Check us out on Facebook and join us for a free trial at www.princetontrader.com. Trade 'em well.